Very good evening, traders and friends. Today, I'm bringing up with a very good observation what I saw in the market. Actually, I observed something weird. You should also observe this so that you will get saved from making losses. Today's topic is why put options fall more during pullbacks. We should understand the behavior of option premiums in market reversals. Why did the market crash? Why, even when the market bounced little bit, my put crashed like anything? That was a very good observation what I made today in the market. The reason was actually we are nearing the expiry, weekly expiry. Today is Tuesday, and there are only 2 days left for the uh, expiry, weekly expiry. What has happened here? What I observed is Nifty fell by 145 points. And what happened to the 24,700 PE rose by 101 points. Usually, if the Nifty falls by 145 points, only 50 percentage, the average will be 90 or 85 points, rise will be there. Instead of that, market rose by 101 points. It was a sharp rise within two candles itself. And then Nifty retraced by under after the fall, the Nifty retraced 101 points. And the same PE, 24,700 and PE fell by 150 points. This was an important observation what I noticed in the market. Then the question arose in me, why did it PE fall more during a smaller pullback? It was not a huge pullback. It was a very small pullback. The PE fell like anything. Let me go to the slide. Here you can see the market Nifty fell 145 points. Then you can see the PE rose 102 points, around 12 or something. Within two candles, it rose 102 points. In my next slide, you can see this same thing. The call option, 24,700 call option, it did not rise during the pullback. Instead of that, there was continuous fall in the 24,700 and CA. Even during pullback, it has been sold. That is total 182 points fall, and it ended in 82 rupees. Here, what affects the option premium is intrinsic value. Another thing is time value and implied volatility. So you should know the option Greeks, delta, gamma, vega, and theta. So this is the thing. Because of this thing, the options behave in a different way. What happens during a fall is put option gains intrinsic value. It gained the intrinsic value, and the implied volatility rises due to fear because it was a huge fall within two candles. Premium increases like anything. And another thing, what happens during a pullback? So when Nifty started pulling back, intrinsic value drops very quickly and implied volatility drops sharply. That is IV crush. When there was an IV was pumped like anything, At that time, implied volatility dropped very sharply, and also time decay accelerates because that pullback was nearly for 2 hours, 1.5 hours. It was a slow pullback. In that, premium falls sharply. That is 151 points. I showed you in the previous slide. The reason for the pullback, why put fell more in pullback was first is IV crush, loss of intrinsic value, and theta decay. Because this put option and this is a weekly expiry put option and it is near the expiry almost. So even a smaller pullback can cause large premium erosion. Options inflate on fear, deflate quickly on relief. It deflated, actually, this option premium deflated from 300 and odd points to 169 points. It fell. Finally, it closed around 228. That is a different question. So, what you need to do as an option trader, when you see the quick rise in the put option, you should book your profits. Book profits quickly when PE rises fast and fall. Use trailing stop losses to lock gains. Watch for signs of reversal to avoid IV crush. You need to, signs of reversal, you need to watch for that. Always consider volatility behavior in your strategy. In your strategy, suppose if you would have gone long, you should consider the volatility behavior. So because of the high volatility, the premium quickly rose to 300 and odd points. Then you should consider that volatility behavior because the fall was very quick. With the Nifty underlying fell in within 2 5-minute candles. It was a huge fall. Here, the one clue for book profits is I'm seeing here this was a squeeze and market PE rallied to 300 and odd points, 320 points here. The what you need to do is one clue is this is a measured move, 89 points. From here, it is giving almost the same 96 points measured move. And also, there was an IV crush, implied squeeze was there. Bollinger Band, Keltner channel squeeze was there. The relief caused, this is a clue actually, relief caused the PE to rise very quickly. So, this is one clue. Clue is measured move, that is to book profits. You need to book profits. You can see later here, after that, only for 101 points fall, the market fell 151 points here. The put premium fell like anything. Another clue for this is I've already mentioned in my previous video, that is one indicator, that is dynamic support and resistance by chart price. Actually, it will be there in the market, plotting in there, and it was showing sell pressure around 68. When the price moves to that level, and it is a sell pressure is coming, it is warning like that, then that is the way you can book profits. These are the two things you can take care of that. And also you should have in your mind that this any put option or the call option, they are prone for time decay because the expiry is only 2 days. Exorbitant price will not work. Actually, straddles will start working in the market, the premiums will decay. That's how it is. So this is a picture, confused picture, asking myself why my put crashed. Even though in the very small bounce, the put crashed to for 101 points pullback, the put crashed so much, 151 points. That is a question. Because that was the theta decay and IV crush. Because of the volatility crush and also theta decay because it market pulled back very slowly in sideways. This is how it is. So from now onwards, you start observing the market very carefully so that you will get saved from this type of traps. This is a trap actually. If you would have held the position thinking that put option will go up, so you could have taken care of with all these, small tips, what I've observed and what I'm telling. You need to be very careful from now onwards. Okay, friends. Thank you very much. Nalnakshi Swami signing off.